Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is testing a quite significant monthly support and demand area. In fact, if we look closely, we can notice how exactly from here all this previous rejection to the upside was created. At the moment, the market is testing the exact same zone, has already started rejecting it to the upside, and there is a possibility of seeing more bullish price action being created away from this area. Most importantly, because in rejecting this move to the upside, the market would also complete this big monthly M pattern. Now, I spoke about M patterns quite a few times. After the creation of an M pattern, the market generally reacts with a rejection to the upside, completing the pattern at the neckline. That is a pattern that the market likes to create over and over again. We can see, for example, here, clear example of an M pattern. After the creation of an M pattern, usually the market goes and completes the M pattern at the neckline. So the previous support turned resistance. We can see another one here. The market then went and completed the pattern at the neckline. So it is not every single time, but when you see a pattern like this, there is a good probability of seeing that potential completion at the neckline. So from a monthly standpoint, it seems like there is a possibility of seeing a potential rejection to the upside away from this area in the long term, potentially completing the pattern at the neckline, which in this case is also a quite important structure level from a historical perspective, acting as previous resistance here and here, turn support here, and now again resistance here. So on the monthly, everything seems quite clear. Let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, the situation at the moment is of a market that is still in a clear weekly downtrend. The market has been creating a series of lower lows and lower highs. At the moment, it is facing previous weekly support and resistance with the possibility of some short-term bearish price action created away from this area. Now, if we drop down on the daily time frame, what do we see? Now, here on the daily, we can see how the market has just created this W formation. Now, in general, as for the case of an M pattern, when you have a W, there's a good probability of seeing first a potential completion at the neckline and then the continuation to the upside. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on the JPY. Now, if we look at the data here for the JPY, we can see how with the last reports, we went from having minus 184.3K net, 0.2K net positions all the way up to now having a positive plus 56.8K net positioning. Now, this shows how institutions have moved from the bearish side, having more shorts than longs with 220K shorts compared to only 36K longs, all the way up to now having a positive net positioning of plus 56.8K net positions with more longs than shorts, 97K longs compared to only 40K shorts. So that has made the JPY quite strong. And a strong JPY makes USDJPY weaker. So there is a possibility, at least in the short term, to see that potential correction to the downside, completing a W formation, and only at that point to see some institutional longing, because at the moment, since institutions are longing the JPY, they are essentially shorting USDJPY because every currency on the spot is traded against the USD. So if you're looking at the data for the JPY, you're actually already looking at JPY USD. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description, so you never miss new updates. Now back to an analysis. So in a situation like this, What would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point, I wouldn't be surprised to see a potential correction to the downside, completing this W formation and the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.